In today's video, I am going to be breaking down 3 really good oil stocks right now. As we know, the oil price has gone through the roof, and it's not going to be fixed anytime soon. Production is at a very low amount coming out of the ground right now, and it takes a long time to be able to basically ramp up that production once again. Plus, there's a whole labor shortage. So let's get down to it. Let's see why these stocks are actually going to be doing extremely well. And we've also heard from Chevron CEO on CNBC that, of course, there may be dividends that are increased hugely, mainly because of just the oil price being so high and these companies not looking to invest in themselves. So let's get down. Let's check out these 3 really interesting stocks. First is Chevron Corporation, CVX. Now from there, they currently pay around 4.9% dividends at the time of making this video, and their stock is up about 0.75% the previous day and about 0.5% in the pre-market today at the time of making this video. Volume is at 10.5 million shares on average every single day, and even though this is pre-market, volume is already at its average. There's going to be a lot of push into oil stocks right now. From there, their PE ratio is a bit high, technically speaking, but versus other oil stocks, it's not terrible, but it is still kind of high in my opinion. Let's go over and check out the charts of this stock. So over the past 5 years, we have seen a decline from just over $120 a share to now being worth $109. They did bottom out just around $60 back about a year ago or a year and a half ago, back when oil was negative. Literally, they could not give away oil for free. They had to pay people to take their oil. Also, since then, we've seen a higher volume amount from where we have seen previously. This tells me that there is obviously either a lot of people exiting or a lot of people getting in, considering the stock has rose since from $60 to $110. We're now seeing that yes, those are buys, and we can really assume that there's going to be a lot of big investors looking to invest because there could be a very big upside. And if you look at the previous trading range of exactly 5 years, then you're going to be seeing that it's still in the bottom of its 5-year range. Of course, there was that blip when oil went negative, but if you really look at its 3 years prior to the pandemic, you're really seeing that it's essentially near the bottom of its trading range. Also, if we zoom into the MACD, we're seeing that it's starting to converge and possibly cross, which means that there could be a little bit more upside coming. We can also see that they do raise dividends quite often, and the last time they raised their dividend was in May. Previous to that, they rose their dividend back in February of 2020, and then before that was February of 2019. So generally speaking, every February, they missed this previous one. However, about once per year is a pretty solid amount of dividend raises. When we look at their earnings, however, of course, they're going to be missing a few or meeting a few because oil wasn't exactly doing super well. However, recently, we've been seeing that they have been beating earnings. October 29th is going to be the next earnings call. It's going to be very interesting. Obviously, when it comes to 2020, oil was down in price, so they didn't make all that much money. In fact, they had a negative earnings. However, it is going to be quite interesting if they could return back up to that $120 to $160 billion a year range. Next is Occidental Petroleum Corporation, Oxy, OXY on the stock market, and this one doesn't pay a massive dividend at all. It's actually a very small dividend. They were definitely hit very hard when it came to that negative oil. They do trade at 16 million shares on average every single day, and they are up in the pre-market about 3%, and they were down the previous trading day on Friday at about 2% down. They were not doing exactly great before the pandemic. We can see that they were on a downwards trajectory beforehand. However, something that happens when it comes to a pandemic, or well, I shouldn't say pandemic, they don't tend to happen very often, but something that happens when there's a recession, and in this pandemic, is they were able to lay off a lot of staff, and because of that, they should be a little bit more profitable into the future as long as they don't do the mistakes they were doing for the 2 years prior to the pandemic. See, the really nice thing when it comes to companies and businesses that may have been slightly struggling before a recession, or before a pandemic in this case, is the fact that during recessions and during pandemics, companies get very lean. They get rid of a lot of extra costs. Things like extra staff they don't necessarily need. We all know at least one person who works for a company and they literally say, I don't know what I do at work. I just sit there and do nothing, essentially. There's a lot of positions like that. I have family members who worked for Ford for a long time who basically did that, and yeah. So basically, from there, this looks like it could potentially be a strong business to invest in. They have, however, lowered their dividend to a penny from 79 and 78 cents. That is going to be because they didn't make money. They were not making money. They were definitely not making any money. And we can see that right here. They got hammered during the recession. They have, however, looks like they're starting to make a profit. Their previous 2 quarters were beats, and the last quarter before this next one is a beat of 29 cents, and it was a positive earnings. This is what we want to see. And of course, the third quarter, November 4th, is going to be very interesting to look at. And then one company that I used to invest a little bit of money in was Canadian Natural Resources, CNQ. And this one currently has about 3.6% dividend, 6 million shares traded every single day. And it's actually a very interesting company. I'll actually tell you how I was trading this one right now. By the way, look at the PE ratio, 15. So I used to trade this stock way back here as well as here. And what I did was I was buying it near the bottom and I was selling it near the top. And how I did this was I seen it happen here and I tried it there. Because I seen that, and I was an amateur at the time. That was when I was first starting to trade, and to me that looked like a W, so I wrote it up. Now, when it started hitting the top, I thought, well, for a couple of days it stalled, and I thought, well, it should be exploding out of that. And it wasn't. It was kind of trading sideways for a couple of days, and I decided to sell. And I was right, and it went back down. And then I thought, well, that seems to be a pretty solid line. I'm going to buy it again. I'm going to sell it at the same point. And it started trading sideways like this, and I got out of it right about here. And then it rode all the way down. I never bought it here because I thought oil was dead. And of course, it's recovered since. So I didn't play this one, but I've played the last 2. Over the past 5 years, we can see it pretty much traded almost pretty well sideways, almost. And then it basically collapsed, and it's recovered quite nicely now. It's actually basically at its top over the past 5 years. Something else that's nice is that they also never lowered their dividend and have since increased their dividend like they normally have been. And when it comes to their earnings, it's actually quite interesting. So we can see that they've had four quarters in a row that are beats. They've also had their negative 2020, which every oil company seem to have, and the 3 previous years before the pandemic, they've had increased revenue and increased earnings. This is what we want to see from companies. I really care about this. This is nice. This also translates into this. However, what I like to see is, yes, there can be some close quarters, there can be some blowout quarters, there can be some meeting quarters. However, what I really care about is the end of the year, and did they increase? If they're increasing, they are a growing company, and that is always good. So that's my 3 choices for some really interesting and good oil companies going into the near-term future. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.